Taxes have been kicking my ass for years. I mean, I just have a back connected to legs. My ass is gone because of taxes, guys. And the reason why they always win is because I never understood them. Now, are taxes kicking your butt like they did mine? Well, guys, they don't always have to win. In this video, I'm gonna be talking about the different kinds of taxes and what we can do to avoid them.
Where's all your money gone, Daddy?
Taxes. 9, 10, 11.
It's okay. It's part of the game.
It's not.
It's
not fun.
It's not fun to what?
It's the worst part of the game.
It's what?
Taxes.
So I remember it like it was yesterday. I worked 40 hours the whole week. After putting 40 hours in, Friday came and it was payday. So I get my paycheck, I open it, and I look, and it's not what I expected, because the night before I did all the calculations. So I look at the bottom of the check and I see income tax, federal tax, and then I see Social Security. So I ask my coworkers, they look at me and they're like, those are taxes. I didn't learn that in school. What the hell are taxes? The average person over their working lifetime will make $2.7 million. On that $2.7 million, they will be taxed $355,366. With those crazy numbers, I know what you guys are asking. A tax is a financial charge by an organization called the government. These taxes that are taken out of our paychecks are used to fund prisons, highways, the Boys and Girls Club, military, schools, public assistance. Our taxes are used to fund economic growth. Now, there are different kinds of taxes. The first one is income tax. Now, income tax is the tax that is taken directly out of your paycheck. The reason the government takes this money out of your personal income is because they need it to fund the city. The government depends on you for about 50% of its total revenue. Now, you know that thing in April around April 15th when we have to go sit down with an accountant or CPA and do our taxes? What is that? So during the year you're working and paying your taxes, the reason you get back money is because you're being overtaxed. And the people who avoid taxes and go exempt end up owing at the end of the year. So every year on April 15th, you guys want to do your taxes, because if not, the IRS is going to come knocking at your door, or they're going to go inside your bank account and take out your money that you have. That's a terrible feeling. And I'm speaking from experience. Don't be that guy. Okay guys, the second tax we're going to talk about is property taxes. Now, property taxes is just like it sounds. Taxes on a property or luxury items like a car or sometimes jewelry. Property tax is the main source of revenue for the local governments. The third kind of tax I'm going to talk about is sales tax. And a sales tax is just the tax on the sale of products. Sales tax is paid when you buy something. The business you purchase from sends those taxes to the government. The fourth tax that we're going to talk about is called an estate tax. An estate is all the money and property that belongs to a person. An estate tax is tax on money or property that is left behind when a person dies. Damn that government. The fifth tax that we're going to talk about is Social Security tax. Social Security tax provides income for elderly and disabled people. We can't have grandpa doing hard labor at the age of 75. So guys, they put in their work all those years. You're going to be getting that too when you turn 65. This money is also taken from your paycheck. And the 6, Medicare tax. Medicare tax provides health insurance for the elderly and disabled. Now that you guys know all the taxes, you're probably thinking, man, how do I avoid these? Well, I got a solution to paying less taxes. Just make less income. Stop working as much. Stop working as hard. Take days off. Don't go to work. That's how you pay less taxes. Guys, I'm totally kidding. That's a terrible idea. Don't do that. Don't do that at all. So, if you want to pay less taxes, you have to lower your income that the government views as taxable. So now, guys, I'm going to give you 2 ways that you can get a tax advantage and save money for retirement. If you don't take advantage of these accounts, you are leaving tens and thousands of dollars on the table. Now look at it like this. You guys have a taco, a plain tortilla, and you want to add stuff on the tortilla like carne asada, cheese, cilantro, salsa. You want to add all these things to make it the most delicious taco when you take your bite, right? Well, this goes the same for your tax advantage and retirement accounts. You want to load these accounts up because they're going to keep growing and growing and growing to what we like to call the 8th wonder of the world, compound interest. So the first account is called a 401k. These 401ks are only given through your employers. The next thing you want to find out is if they match your 401k. If they match whatever you put in, you guys do it, because every dollar that you put in, they're gonna match it. It's free money. Now the max you can contribute in 2020 is $19,500. Now this money is all going into the 401k account pre-taxed. And what I mean by pre-taxed is the IRS doesn't see it. When your money is in a 401k, it is getting invested into mutual funds. These mutual funds have historically, over the last 60 years, grown 7%. The beautiful thing is that it grows tax deferred. It's going to save you around $6,000 every year. For example, if you made $100,000, the IRS is only going to see $94,000 because the rest went into your 401k account, which the IRS doesn't see. So you got your money. When you decide to pull it out for retirement, it is now taxed. Now I know what you guys are thinking. Your money, it's going in pre-taxed. We're avoiding all the taxes. But at 59, I'm gonna get taxed. That's correct. But when you go to pull your money out, you will be taxed in a lower tax bracket because you won't be making as much money as you did when you were in your younger years. So you got your taco, your plain tortilla. Over the years, you're putting your carne asada, you're putting your onions, you're putting your cilantro, you're putting your salsa. But at the end, this guy's gonna come and take a little bite. Once he takes that little bite, the rest of the taco is yours. Now, if your job doesn't offer a 401k, no worries, because there's something equally beneficial. Now, the second way is with something called an IRA. An IRA stands for Individual Retirement Account. Totally different from a 401k because it's post-taxed, after-tax money. Everything going in has already been taxed. The max distribution that you can put in every year is $6,000. And this money that you put in grows tax deferred. our money is compounding because of dividends. At 59.5, you can pull out all your money tax-free. Now look at it like this. You have this taco. You've put your meat, you've put your cilantro, you put your onions, you put your salsa. At the beginning, the IRS, the man, will come and take a little bite. But you know what? After all those years putting in all that money, the toppings, making it taste good, at the very end, you get that taco all to yourself. The IRS is gonna tax you up front. But once you take your money out, the IRS is gonna close its eyes and let you flourish. So all in all, guys, get into something. Because if not, you're gonna be leaving money on the table. You can go get an IRA account very easily. It's as easy as going to your local bank. Thank you guys for tuning in. Leave a comment down in the comment section on what you guys wanna see next. Thank you guys for watching again. Let's get it.